Happy Monday, traders. It is 8:01 a.m. Chicago time on Monday, the 1st of August, 2022. We turn the page on the month this morning. Thanks for joining me on episode number 2284 as we make our way to 2,300 episodes of the Trader Bite. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Looking at the Convergent Trading pre-market summary sheet this morning, we have a mild risk on market this morning as, that's kind of changed quite a bit since I prepared this summary sheet. It's actually fallen to the other side. It seems like it's mixed to mild risk off now on this last move lower. Looks like, looks like provocative action against China. Oops, sorry about that. That was my stock alerts. U.S. House Speaker Pelosi is to land in Taiwan on Tuesday night, meeting lawmakers on Wednesday, according to Liberty Times. And there's been some a lot of warnings from China about this. Not sure if that's what the market's responding to. In any case, we went from mild risk on to mild risk off. Currently, no major earnings this morning. We did hear from On Semiconductor, but nothing really to discuss here, major to discuss here. Moving on. This morning, also, the Bank of England said that it would most likely raise 50 basis points on Thursday. As indicated by 46 of 65 economists, 19 said by 25 basis points in a poll. And then Ukraine shipped its first grain shipment in a long time. As far as the calendar this morning, we had the unemployment rate out of the Eurozone this morning came in at 6.6% versus 6.7%. So that's slightly better. We did have the S&P Global Manufacturing PMIs coming from Spain, France, Germany, Eurozone, Great Britain, and so on and so forth. The U.S. has its global manufacturing PMI final coming out at 945. This is not expected to be major. Expected at 52.3. ISM manufacturing PMI, this is a market mover. Expected at 10 o'clock, looking for 52.2 on that index. And then this evening, building permits and home loans out of Australia. The S&P is in balance. The S&P actually has extended its range to the downside now to 4,100. But the overall overnight profile is imbalanced. 99% of the volume is short, meaning that 99% of the volume at price for the S&P has occurred below Friday's close/settlement. The range is 38 points, which is just slightly above the mode of ranges, overnight ranges. And again, we just tested the key 4,100 number. We did have a really strong run on Friday, and now we are pulling back. We're seeing the same in crude oil. Crude oil showing some really interesting action. Crude really ripping some heads off as it impulsed lower this morning into the 94.80 zone, pulled back deeply, and now continuing lower. Crude down 5% down on crude. It is really tearing it up. Copper's off, and so on and so forth. The dollar's been losing steam against the other currencies. As it's continuing to push lower. The euro's pushing higher, so is the British pound and the Japanese yen. That's the summary of what's out there. Let's take a look at where this market is. Let's switch this to extended. And let's look at the TPO chart to begin with. This is crude. This is the S&P. The S&P, look at that. I talked about this quite a bit over the last week and a half or so, that if we push above the 60-12 area, sorry, it's chopped up like this. There's just not enough room anymore. Hang on, let's see. We can shift it. Yep. We can do it. All right. So I talked last week about 1625, 40, 1625, and any push through. And we ended up closing above it right there on Wednesday. Any push through is likely to fill in the single prints all the way up into the 86. Beautifully done on Thursday, just exquisitely done on Thursday. It's actually 81.50, I think. Exquisitely done on Thursday. And then on Friday, we open up, we test down. We test down on Friday. Right here, we test back down into that 81 to fill in the gap zone, and then we push higher, and we end up finishing relatively strong on Friday on a push that dragged the point of control up to 41.33 on the volume, and really getting into that 41.46, I believe, which is the composite point of control of this region. So the S&P has really reached its final station, in my opinion, in terms of testing this range. Now remember, Friday, that 41.21 was key. The next thing up, the next price up was 46. And Friday's high was right up against it at 44 or so. And now we've pulled back. And it looks like we are opening in range. We're trading at 41.06. We're opening in range in value of Friday. Although Friday's not really balanced. I shouldn't say in value, but it's opening in balance of this entire range. We are really likely to spend this week chopping around. This week has some key releases. The JOLTS job openings number tomorrow comes out at 10 a.m. Eastern. On Wednesday, balance trade out of Germany. ISM Services PMI on Wednesday as well. On Thursday, we have the Bank of England interest rate decision, balance of trade out of the U.S. But on Fridays, the big one, we get U.S. unemployment rate and the non-farm payrolls expected at around 250,000. The prior is 372. So my expectation for the week is that we are likely to fill in this range from 4150 to 4016, maybe 4,000. This range is likely to get filled in here. I don't have high expectations on the first week of August. August is the most requested time off month of the year. So I'm expecting it to be really in the depth of summer trading. So that's where we are. Looking at the intraday. Here's the intraday, very methodical. We have higher low, higher low, higher low, higher low, and as long as it holds this 4081 area, we are likely to continue to trade inside of yesterday's range. Really, today I'm expecting it to be whippy back and forth throughout the day. I'm expecting some whipsaw balancing action. We are, again, I want to remind you, we are in the depth of this balance. I mean, we are heavy in this balance right here. So that's what's on deck. I don't want to add too much more here. I gave you what's ahead for the week. We've looked at where we are. Again, we have reached our key station here on the S&P, and it's likely to go into balance. It's, you know, the partiality or the bias to heavy balance here is really prominent. We filled in the single prints. We have some weak structures on Thursday, on that rally on Thursday, which is where I'm expecting us to go. I'm expecting that we are on top of the big lump here on Friday, and we are testing back and forth to 4,100. If it extends the 4,100 down on the open, which I expect that it will, it currently the overnight point of control is 41.18. The overnight VWAP and mid are at that same price. It is, and we're trading below it. So there's a fair amount of resistance, in my opinion, above us, and I'm expecting it to poke through the 4,100 and start to push and test into the opening price of Friday, which is 40.89, and to get down into 40.81. If it breaks 40.81, look to Thursday's single prints, these areas right here. Look to those to be taken out into the 40, 46 or so. That's where I'm expecting it to go, 40, 46, if it takes out the 4,100. Otherwise, I'm expecting it to get some pretty good resistance at 41.21, which is the balance price of this whole region. And that's it. Really, that's all there is. I mean, that's pretty good, 70 points of range. Not going to get anywhere near that on the first day of the month here. We do expect some inflows for the first day of August, but overall, really just temper your expectations and be disciplined. Real quick, because I just started focused coverage on crude oil. Crude has really made a turn here. Crude has been in balance for a little bit for the entire month of July. We had a peak at the beginning of July here with crude, and we sold off down into the 88 handle in crude. And what we've done in the last few weeks is really chop around. And what we did, we had a double TPO low in crude, if you understand what that means. We have double TPO low in crude. Very weak low. We closed Friday at 98.62 or settled Friday at 98.62. This is an RTH only chart. RTH in crude, just so we're all on the same page, is 9 a.m. Eastern to 2:30 Eastern. Crude is a fundamental product. It is an around the globe product. So the book from crude gets moved to Asia, then moves to London, then comes back to New York. It trades around the clock, but looking at RTH only allows me to box in the time period where I'm looking at it. So that's 8 a.m. Chicago time to 1:30, and it settles at 1:30. So that's why I'm looking at that as the main session. And what crude has done is it took out the double TPO low, and I could have told you that given the way it rejected those prices on Friday, I mean, this entire run on Friday was completely rejected. It opened right in here, closed right down here, putting in a double TPO low. The expectation is it would continue down, but what it has done is it ended the one-time framing up on the daily just now, but it took out also Thursday's low. And what it did just now, right before the open at 8 a.m. here, it broke down this morning. It came back. It held Thursday's low to the tick for a bit, pushed through, and has fallen back through. I'm looking at crude, and this is an open drive. Look at where the opening print is versus where we are. This is an open drive, short side only in crude oil today on pullback structures. The order flow in there has been pretty crazy. This thing really hauls ass when it comes to the order flow. If you look at these order flow, look at how thin that is. Let me de-anchor this. Look at this. Look at these imbalances, 0, 0, 0, 0, and it just rips up and down. This is a 1 tick by 15. Crude is very active, and as I said, it is down 5% for the day. it's going to get most of my attention. Really beautiful. Again, the reason I like crude, and again, this is not suitable for all investors. It's a derivative product or a commodity product, and contains leverage, but it does follow auction principles. It does pay attention often enough. It does pay attention to the VWAP, to the mid, and so on and so forth. And it's a very tradable product, and so it's getting my attention. So if you're a convergent trading, I'll share with you the rotations. I'll share with you the trade sizes for relative delta and so forth. Speaking of relative delta, here's what we've got in the S&P. Here's another reason why I'm looking to the short side on the S&P. The most immediate trade setup for the S&P would be a push back into the 4112 area or so, for continuation through 4100. Once it breaks 4100, we're likely to chop around in there, and then I'm expecting it to continue lower towards 4089 and 4081. All three categories of size, all three aggressors, the short term, intermediate term, long term, the small, large, V large, all are below zero. And to me, it looks like the facilitation or the movement is likely to be more easily facilitated to the short side. I know that's a lot to digest, but here we are. You're digesting. And I want to remind you also to make sure you hit the like button and to subscribe to the YouTube channel. Just hit the subscribe button on YouTube or look for the subscribe link as I post it on my Twitter feed. Of course, I invite you to follow on Twitter, twitter.com/FuturesTrader71 to get notices for when the next video comes out, or if there's anything worth discussing publicly, I'll post it in my Twitter feed. Good luck, and I'll catch you tomorrow. Take care.